And if you are positive, then does Sun make the cut in that universe?
Yeah, I think so. And, they have the IPL team as well. So that's also a lot of value creation happening over there. Year after year, IPL becomes larger and larger. And I'm pretty certain that their team has been doing as well as it has been, should be creating value for Sun TV shareholders as well. And, I really appreciate what Mangalam said, that from this quarter onwards, rather from mid-November onwards, you could expect ad spends to increase for the media companies. And that resonates with me. And if you look at the way the FMCG companies have been spending on advertising spends, they've taken advantage of low raw material prices to spend on more on advertising. And that clearly the benefit is going to go to these general programming, general entertainment channels like Sun TV. And Sun TV has a massive market share and eyeball share as well in the key states. So from that point of view, very positive on Sun TV. And elections also coming up, so that could be also an additional trigger for media stocks, and certainly valuations are pretty reasonable.
Okay, all right. Deepan requested to stay with us. We also spoke to market veteran Mr. Ramesh Damani on his take on the PSU space. Let's listen in to what he had to say.
If you look back at the history of markets, every secular bull move in India has had leadership. So, for example, in '92 it was the cement stocks, in 2000 technology stocks. I'm of the firm belief that in this bull market, the leadership is the public sector stocks. Now, what I believe in that, there'll be a rolling bull market there. So we had movement in defense, then rail, and then banks. So I believe the leadership remains with the public sector stock. And remember that in a bull market leadership move, stocks go up 20, 30x from the lows. So I feel that we are witnessing a similar boom. And I think they will really blast off in what we call the third phase of the bull market, is perhaps after the election results are known to the market. So I believe that will continue to be a theme.
Okay, now that was Ramesh in conversation with us yesterday here. He was live with us from the Bombay Stock Exchange. And the point that Ramesh was making, that as he sees it, PSUs will continue to remain a major leadership sector for the market in the new Samvat as well, despite the run-up. In fact, pull up the PSU index today. Pull up a lot of these stocks. In fact, let me go back to my screen before I toss this to Deepan. PSUs have been the high flyers, whether it is a BHEL or a PFC or a REC, or you look at the banks today, look at UCO. It's just across the board, IOB 4.5%. And as I'm speaking, a lot of PSU banks are rallying now and reaching the high. That's the PSU bank index. Pull up the Nifty CPSC or the PSU index per se. Once again, it's the best performing one in the market. Now, what side of the debate would you be on, Deepan? Yesterday, Mr. Damani gave us tremendous perspective. He said that this will keep going higher and you'll have to figure out how to negotiate this entire complex of PSUs. What's your take and what's your advice?
No, I tend to agree with him. I think after many decades of underperformance, PSU stocks are making a comeback, and that too with a lot of momentum and a lot of trading interest as well. And one other aspect is that a lot of PSU stocks, the shareholding pattern is very narrow in the sense concentrated with the government and a few institutions. So from a liquidity perspective also, small amount of buying can take these stock prices much higher. It's just that maybe for the time being, they've run up a little bit ahead of their numbers. And at corrections, I think a lot of these companies would make good entry points, particularly like banks as well as the defense companies, especially defense companies which have got order books going into 3-4 years or beyond, because that provides good earning visibility as well. And that should lead to higher price to earnings multiple. At the same time, I think it should lead to even higher return ratios, which will support higher price to earnings multiples. So very positive on PSU banks. It's just that optically, for the time being, they appear to be slightly overbought.
Okay, all right. Thanks a lot for that, Deepan. Well, for the time being, we'll slip into a short break. On the other side, Devina Mehra from First Global joins us to share her take on markets and the way ahead as well. Stay with us. Welcome back. Well, a few stocks actually have slipped in the last few minutes. So let's pull up the intraday chart of a few names. So GMR Airports has slipped a little bit lower. I recall the stock at 63, 65 rupees. And a lot of people were saying now this stock's set to take off. But actually the reverse has happened. You pull up, I think, last month and a half or 2 month chart, you'll see the stock actually has dipped from the recent highs. So that moves to the low point of the day. You had Emphasis as well, that's moved a little bit lower. So that's sitting with a cut-off close to around 2.5%. So let's get the intraday chart of that one up for you on the screen. On the flip side, one stock that's flying away, that's India Bulls Housing Finance. Just take a look at that. Beautiful move is what we're seeing. India Bulls Housing Finance, one of the big underperformers, but that's bucking the trend as we speak. And Surabhi, what do you say about these exchange-related stocks? Valuations seem to have definitely taken a backseat, but these names, BSC, MCX, they have rallied. There have been attempts being made by the current management to change the way the business is run. And both those two stocks, they are starting the new year on a solid note. BSC as well as MCX, both of them flying away.
Okay, absolutely. These exchange stocks have been exchanging a lot of wealth with their shareholders, perhaps you could say that. Well, as we begin this new year, as part of our somewhat centimeter, we at CNBC-TV18 polled a number of market experts to find out what they think markets will do in the new Samvat, what the key risks are and what factors could be in focus, what sectors could perhaps outperform. Nimesh is here with the details of the street poll.
Samvat 2079 ended on a very strong note with gains across the board. In fact, all sectoral indices ended in the green, with the PSU index giving the best returns and emerging as a new leader of this bull run. So we asked the experts what to expect in Samvat 2080. CNBC-TV18 did a dipstick survey across more than 20 market participants to gauge the mood. The biggest feedback was they continue to bet on stocks as a preferred asset class. So that was the highest, 68% voting for stocks. Only small portion of people opting for gold, and fixed income was the second best as the most preferred asset class. So what kind of return should one expect in Samvat 2080? 45% of the market participants see the Nifty ranging between 21 to 22,000. Only a small 9% expects the Nifty to fall below 19,000, but there was an equal amount of bull versus bear, with nearly 13.5% each voting for a Nifty above 22,000 as well as below 19,000 as well. So earning has been a big driving force for this market to outperform. So we asked experts what to expect in terms of earnings in FY25. Nearly 50% of the participants expect the earnings between 12.5 to 15%. There is a small portion who also expects the Nifty earnings to be much higher, between 15 to 17.5%. So that's the earnings perspective. Now, what to expect in terms of sectors which can do well, or what they'll bet on. The biggest feedback is that this could be the year for the return of the large caps. 50% opted for large caps, and only 13.5% said that small caps can continue to outperform. So what are the sectors which can do well in Samvat 2080? Financials stand out in terms of the biggest bet, and within financials, it's the PSU stocks which they expect will continue to outperform. The least preferred sectors were autos, cement, pharma, and manufacturing. All have done well, but now they expect a bit of underperformance there. So what's the key risk for the market going into the next Samvat? The key domestic risk seems to be the general elections in 2024. For almost 55% opted, that's a big risk for the market. From a geopolitical perspective, the biggest risk seems to be two things. One, the geopolitical risk, as well as the Fed policy. These were the two big risks from a global perspective. But given the momentum in the market, looks like Samvat 2080 is going to be a good note, but this could be the year of return of the large caps.
Return of the large caps. Will that indeed happen? That is the big, maybe billion-dollar question. Thank you, Nimesh, for that very interesting poll. Devina Mehra, founder, chairperson, and managing director of First Global, is with us now. Devina, wish you a very happy Diwali, first of all, from the entire CNBC-TV18 family. Hope it's a healthy, wealthy, prosperous, and positive new Samvat for you, all at home and all at work as well.
Thank you, Surabhi, and wish you and the team at CNBC, as well as all your viewers, a very happy Diwali and a fab new Samvat. Health, wealth, prosperity, peace for all.
Thank you. Absolutely. Peace for all is perhaps the most important one now. So I don't know, Devina, if you could hear that poll that our colleague Nimesh just drew up, but basically it ended by saying the big expectation is that the new Samvat is going to be the year when large caps decide to catch up. Do you think that can happen? Will it be time for the big boys to stand up and get counted?
if you choose wisely. So first of all, of course, I mean, before talking of the new Samvat, I just want to tell the viewers that equity is not an asset class where you should be making decisions really year by year, because we all understand in theory that equity is a volatile asset class. But I don't know how many people understand how volatile it is, that the returns can vary not just from year to year, but from decade to decade as well. So you really have to have a really long-term view when you're talking equities. But coming back to where the markets are today, I mean, I have never ever made Sensex or Nifty projection at Diwali time or in at New Year time either, for that matter, because that is something you cannot know. Daniel Kahneman calls it objective ignorance, that to say something with confidence about something which you not only don't know but cannot know is not sensible, to say the least. But as far as the market, where markets are poised, so coming back to what I was saying in terms of the variability in equity returns, we all have this figure of 15-16% return in equities, which is how the Sensex is compounded in 40 plus years. But the variation, I'll tell you how dramatic it can be. So if you look at the start of the Sensex, if you'd invested 100 rupees in 1980, it would have become 700 in 10 years' time. If you had invested it in 2010, it would have become only 230 rupees at the end of 10 years, barely beating fixed deposit returns. So the variability is as high. And the point why I was citing this 2010 to 20 return, which was just little over 8.5% compounded, is that meant that for a whole decade, the equity markets were far below that trend line of 15-16% compounding. So even after that run up from the COVID lows, we are still not close to the trend line. So the probability of a crash becomes high only when you are far above the trend line in most cases. So the risk of a crash doesn't appear very high to me for the mainline large cap indices. Again, as I said, you have to pick the sectors carefully. And but on the small and mid cap side, the risks are much higher given how they have run this year, and also given the history, because a lot of investors here may be new, they will not know the history of small caps. So just to put things in perspective, from the 2008 high, the small cap index itself fell nearly 80%, 78% to be exact. And it took another 8 years for it to come back to where it was in 2008.
Yes.
And then you had this bull run in 17, 18, and then again a 2/3 fall. So, I mean, I hear now some managers and micro cap advisors saying I've compounded 50% in 2 years, but when something falls 2/3, it can triple and you would have made zero returns. So
Hi, Devina. Good to have you in. Thanks so much for joining in, and thanks for helping us, jogging the memory back as well. There can be tough times, but in the longer run, I think things look up. So, let's talk about a couple of themes then. What do you like in the market right now? If you had to pick that one particular sector, I don't know whether you're going to talk about stocks, but what would that theme be that you would like our viewers and investors, to focus on, do some research out there, and maybe there could be some potential?
So first of all, whatever I talk about may not necessarily hold for a year, because one other thing in markets are that themes change, whether it is sectors, whether it is geographies in terms of countries, or whether it is asset classes. Things go in and out of fashion, or in terms of how well they are doing. So coming back to what you were asking in terms of sectors, if I look at our present portfolios, our biggest overweight sector is industrials and capital goods. Now, the difference between us and many others were talking about that sector is that we went overweighted it in October 2021. So it's been over 2 years that we have been overweight. And the question actually that we ask every quarter is the run over? Till now, our systems have not signaled that the run is over. So we continue to be overweight. We have trimmed, we have changed stocks. That's been a brilliantly performing sector for us for 2 years, because stocks have doubled, tripled, and so on. What we
Sure.
added more of in 2023 in terms of sectors which we still continue to like are auto components, pharma. So very different from, I saw those were supposed to be the dog sectors in your survey, but that's what our systems like. And a few construction stocks also we have bought. Um, Banks, where I'm always nervous or skittish investor, we don't like quite so much. I mean, between the two, of course, we prefer the PSU banks. So that would be broadly the landscape of what we like presently. But as I said, it's not necessarily a year-long call.
Okay, all right. Okay, that gives us a fair idea, flavor of how your portfolios are positioned. Devina, just hold on for a second because we do want to talk to you about this whole mega PSU rally, and within that, I think power specifically. Just wait for a second because our colleague Rachna is picking up some inputs on why power stocks are rallying today. One of the additional triggers seems to be that Union Power Minister has emphasized the need to expand thermal power capacity in India to meet growing demand. Let's go across to Rachna to get the latest on this. Rachna?
Right. As the world is looking at ramping up renewable sources of energy to meet rising global power demand, including India, the Union Power Minister, R.K. Singh, has issued a powerful statement. And that is that while India is focusing on renewable sources, there's also a need to ramp up thermal sources. He said that India needs about 80,000 megawatt, that's about 80 gigawatt of thermal power capacity under construction to fulfill the rising power demand. Now, to put things in context, India's total power capacity stands at 425 gigawatt, of which over 50% comes from thermal, as it contributes about 239 gigawatt. And the Power Minister wants to add 80 gigawatt to the current 239. This 80 gigawatt is a total figure of thermal power capacity that needs to be under construction. So what's already in construction are power projects with a thermal capacity of about 30 gigawatt, with a mix of state and private players, with a total of 14 such projects across the country. However, 27 thermal power projects with a total capacity of about 24 gigawatts are on hold. This is according to CEA's latest report, which was issued at the end of September. These 27 on-hold power projects have 2 from state, whereas 25 from the private players, whose future now hangs in balance as they look out for more funding options. However, 7 of these 25 on-hold projects have successfully come up with a revival plan. So they will be seeing the light of the day, but not before the next 2 to 3 years. These 7 projects include a revival plan. For 2 of them is coming from Vedanta and 1 from Jindal Power and Steel. Other projects too have been seeing a risen interest in revival, as the market too seems to have taken a note of this need to increase thermal power capacity, as stated by the Power Minister. So, as per Central Electricity Authority's figures and CNBC-TV18's calculation, from the needed 80 gigawatts of under construction thermal power projects, as said by the Power Minister, India now needs about 43 gigawatts more of thermal power capacity to meet this rising demand. The remaining 37 is already in process.
Okay, Rachna, got that. Thank you very much. Interesting stats there. Kind of put the whole story in context. The fact that the need is to move towards renewables, but the pressing sort of situation right now requires India to also up the thermal power capacity. Devina, you have any interest in power? If not power, any other PSU area? Because that's been the real sizzler side of the market in the last 1 year.
Yes, I mean, as I said, the themes always shift. No theme lasts forever. So, this has been another theme shift. So, I mean, as I told you, in banks, we have moved, especially this year, towards the PSUs more than the private sector. And at times we have held some stocks on the defense side also. But I mean, this is not a theme we play in a big way, because a lot of it is also news driven, and you can't really only go by the headline, given even this news report that I was listening into. In power, there are all kinds of things, not just funding, but also whether you've got the coal linkages, whether you've got the environmental clearances, what's the quality of coal that you are getting. So I don't want to do it on a broad thumb rule or seat of the pants calculation. So these things we really have to go into the depth. So I mean, as I said, we bought the odd PSU stocks, but it's not like a big theme that we have played.
Okay, all right. Thanks a lot, Devina, for joining in and giving us your view on markets, and wishing you all the best for the coming year as well. Well, for the markets, we're down close to around 75 points approximately. We're going to get to that expiry last half hour, Rod, and we'll have the Nifty Financial Services Index that could move around a little bit. It was down close to around 0.5%. So let's see how that one's doing as we speak. The midcap index still continues to trade in the green. Slip into a short break. You come back. Nimesh will be waiting for us on the other side. He'll tell us what he's picking up in dealing room action. We'll also be joined by our technical experts. They'll tell us some buy and sell calls.
How should we look at this precious yellow metal called gold?
It's like buying a Porsche or an expensive car. Do it for the pleasure of owning it. And I would say this for anything, including property. If I'm buying gold, I should buy SGB.
Jewelry is not something that you just buy for an investment purpose, but rather it's something that you do to enhance your personality. We are trying to, through our marketing campaigns and all, teach people that jewelry is actually the investment, the safest investment.
Welcome back. You're tuned into Closing Bell. Just 30 minutes to go before you get into that midweek holiday yet again. So looking forward to that. But let's find out what's going on in dealing room action today. Nimesh joins us to tell us what's he picking up in D-Street action. Well, Nimesh, good afternoon. What's your take? Action is there in the dealing rooms or everyone's on vacation?
This on the Friday as well, that PSU index is now playing like a Virat Kohli, and clearly, it's taking a mental now of leadership. So the index is up more than 1%, and a lot of stocks are buzzing as well. The top 5-6 FNO gainers are all part of the PSU basket. In terms of flows, again, it's a muted day, but my sense is there's going to be a small market close selling in some large cap names. So maybe some individual names can get impacted because of the flows. I guess, for the last 1 week, 10 days, there is a consistent feedback that within the PSUs banks are well bid by large institutions. institutions. And now it looks like there is a clear action now. So the PSU bank index is up 2.5%, and a lot of PSU stocks are reacting to on big moves. And even the delivery volumes are quite high for the last many days, and that stands today as well. The other word is on the mid-cap pharma names. The sense I'm getting is maybe a bit of churn is happening within sectors as well. So a bit of profit booking in the mid-cap IT names, and that money seems to be moving towards the mid-cap pharma. So that's a sectoral shift. But broadly, it's the PSUs which is leading the rally, and the bank index is now back in action and on big volumes as well.
Okay, got that. Nimesh, what about individual stocks? What are you picking up?
So in terms of individual names, Nigel, the first stock is SJV, and part of that whole PSU basket which is doing good. Stock is not reacting much in today's trade, but the number 2 was quite good, and I understand some large HNI investors are quite active in that stock. So that's the first one. The second stock is Nuvama Wealth. For the third day running, there are multiple blocks in that stock. I understand a leading HNI investor is quite active in Nuvama Wealth, and hence that stock is buzzing in trade today. The third stock is Canara Bank. I spoke about the bank stocks well bid, the PSU bank stocks well bid. Canara stands out within the PSU basket, big buying interest from large institutions. So expect very high delivery volumes, and it's buzzing largely on back of very strong FI flows. And the last one is Wockhardt. That's going to be interesting. The results are tomorrow, so watch out for earnings. But apart from earnings, there is an anticipation that maybe you'll see some further clarity with regards to one of their antibiotic drugs. So that's a big drug to track, but I guess that's something which is keeping the stock excited.
Okay, all right, got that. So lots of stocks buzzing, even though it's a slightly low volume day. Thank you very much, Nimesh, as always, for getting us the action. Let's now bring this down to some final trades that you could look at today before the midweek holiday settles in. Mitesh is back with us. Mitesh, what stocks are on your radar now?
Yeah. Well, I think, the index actually, if you look at the movement after the gap down opening, hasn't moved much. So not much of an action happening over there. And given the fact that we have a holiday coming up, I think, we are still not changing our stance, and we'll maintain a long bias. So I'll take take some long trades with a very tight stop losses. UPL is something, which I recommend buying with a stop below 549, and look for a target of around 557, 558 on the upside. And the other stock which I like is, excuse me. I already covered Canara Bank, but amongst the banking names, I think, State Bank of India is something which could possibly gain some traction. I was hoping it will get past 584, but we'll take a BTST here with a stop at 576 for a target of 595, because once 584 clears up, then I think some momentum should come in.
Okay, all right. UPL, that's an interesting one in there. Mitesh, that's been a big underperformer, but that's the one on your radar, so we'll keep an eye out on that one. Thanks so much for that, Mitesh. Well, Hemang Jani joins us to give us his take on markets. Hi, Hemang. Happy Diwali. Good afternoon. A few minutes to go before we go back into a holiday mode, so that's pretty good news. But what do you make of this PSU rally? Today stocks from all sectors are doing well. Do you have a preference about this entire basket, PSU basket?
Yeah, good afternoon, Nigel. Happy Diwali to all of you at CNBC and the viewers. Yes, clearly, I think PSU is the flavor of the season, and I think it has something to do with the way some of the companies have reported numbers. So, for example, Coal India came out with good set of numbers, and the outlook in terms of production, the pricing, the e-auction price remains good. The dividend yield is 6%. So I think there is some sort of a buying interest which is emerging there. And when it comes to REC and PFC, I think the scenario, Nigel, which was there probably a year back when PSU banking sector got re-rated, primarily because the valuations were cheap and the operating performance started improving. So similar kind of an action is what we are seeing in case of PFC and REC, where the recent operating performances are good. Stocks are still quoting at about 1.1, 1.2 price to book. The growth outlook in terms of loan margins is getting better. So I think some allocation is being made to some of these PSU because of a combination of this. Within the sector, I think surely Coal India, to some extent, REC, NMDC, these are the names. SAIL also, the performance was reasonably good. So these are the stocks that go with. But I think what we have to reckon here is that the allocation has to be on a smaller side. These are not the large cap names where you can go, too aggressive.
Got it. All right. Got that, Hemang. What about these pharma names? Getting a little bit worried out, yeah? You have Biocon that's down close to 3.5%. Glenmark Pharma now is down close to around 5%. Abbott as well is lower in trade. How do you view these stocks, and do you have a preference from the pharma pack?
If you look at the pharma pack, Nigel, there is a bit of a divergence. If you look at the names like maybe Sun Pharma, Dr. Reddy's, Cipla, Aurobindo, I think when you look at the numbers, they have been by and large better than market expectation. Their commentary in terms of the US generic business is getting better. So I think those are the names where surely there is going to be a lot of strength and stability, because you also have a little bit of valuation comfort. But some of the companies, be it Glenmark, some of the MNC pharma companies, I think there is a bit of a disappointment on the numbers front. So there is a divergent trend, but overall, I think pharma as a space, this quarterly, result season has been extremely good, both in terms of top line and margin for 4 to 5 months.
Okay, got it. In fact, since we're talking about pharma, Hemang, just stay with us. Glenmark Pharma is under pressure post their quarter numbers. Ekta's with us to run us through the fine print. Ekta?
Well, yes, for Glenmark, it was a sluggish set of numbers, but there are a couple of key points which needs to be taken cognizance of. First is that the numbers were adjusted for Glenmark Life Sciences stake sale. Separately, there was an exceptional loss of around 67.9 crores this quarter. The exceptional loss included $30 million towards a settlement of price-fixing allegations in the US with the Department of Justice for one particular drug for Glenmark. Now, Q2FY24 revenue was up around 6% The margins, however, were weaker on a year-on-year basis, so 14% versus 15.9%, and the company recorded a loss this quarter of around 81.9 crores. Yes, there were exceptionals, but maybe it is the margins which really weighed in terms of sentiment. We had India, which was up around 2.8% year-on-year, and North America, which was sluggish, down around 2.2% on a year-on-year basis. Europe, however, did well, so that particular geography was up over 55% on a year-on-year basis. But nonetheless, it seems as though the markets were weighed down by the margins as well as maybe the sluggish performance of India as well as the North American business. The commentary will be awaited, which is on Wednesday in the morning hours in terms of a conference call.
Thanks a lot for that, Ekta. Well, let's move on then. Mark Mobius, co-founder Mobius Capital Partners, plans to step back from the investment firm and that he co-founded 5 years ago. He plans to focus on entrepreneurship investments and consulting. I think Hormuz, my colleague, is joining in to fill us in with more details on that. Hormuz.
Well, after almost visiting 112 countries, investing in 5,000 companies across 3 decades, writing 12 books and managing assets of over $40 billion, Mark Mobius, the 87-year-old fund manager, investor, also known as the godfather of emerging markets, has finally decided to step down. Now, Mobius's tryst with emerging markets began some 3.5 decades ago in 1987 when Sir John Templeton, the legendary investor, had asked him to lead the Templeton Emerging Markets Fund, and that was one of the first funds in the emerging markets across the world. And since they started off, they had invested around $100 million across 6 countries, and by the time Mobius left 3 decades later, that fund had grown to $40 billion in 70 countries. Now, but how did Mobius become such a revered emerging markets voice? For starters, he was one of the first ones to call the bull market of 2009, and he was also one of the few bargain buyers during the Asian financial crisis of 1997. Now, when panic selling had gripped the Russian markets a year later in 1998, Mobius chose to buy Russian shares, and he was also one of the few first institutional investors who identified Africa as a frontier market. He was one of the first ones to open a Mobius fund in Africa as well. Now, after he moved moved on from Templeton. Mobius went on to, as you said, he found Mobius Capital Partners in 2018, and that fund also focuses on emerging markets like China, India, Latin America. And when it comes to India, Mobius has always been bullish on the country, its market, and he recently interacted with CNBC-TV18 where he mentioned that he expects the Sensex to go up to as high as 1 lakh over the next 5 years. And he also mentioned that he sees no reason to cut back on his allocation to India and the Indian markets per se. Now, Mobius has had a long journey, so it's pretty obvious that it would not have been without his fair share of adventures. Now, he dodged bullets, and by that I don't mean he prevented himself from making a bad investment, but he literally dodged bullets during a military coup in the Philippines. He also, in fact, a recent comic book refers to him as Bald Eagle. And one of the first theses that he wrote at the Massachusetts Institute of Technology, which is the MIT, was on communication satellites. And lastly, I'd like a quote to summarize his journey. And he said, and I quote, "I had taken bone-jolting rides on mountain roads that would have turned my hair gray if I had any left to turn, that is. All of that to find undervalued companies before other investors did." That summarizes Mark Mobius for you. With that, back to you.
Well, that's a wonderful, wonderful lesson in history and in time in markets about someone who has been, literally as Reuters calls him, the godfather of investing in emerging markets. Thank you, Hormuz. Very nice one over there. We'll take a break on that note. Back with a little more market talk on the other side. Welcome back. You're with us on Closing Bell. Well, let's get you some more perspective from the market masters. The bull market in India is about to start. That's the word coming in from Atul Suri of Marathon Trends. Listen in to what he had to share with us on Muhurat Day. He was talking about investors preparing their portfolios for a prosperous Samvat 2080.
The fact is that the euphoria is in some pockets, right? But overall, per se, our market actually has been consolidating for the last 2 years. And that is why the setup is very good. Because, very often if you have a 30, 40-year kind of move here, the year after that is very difficult to build on it. But the fact is, I think if you look at markets, not just 1 year, because of course it's Diwali somewhat to somewhat, but if you pull it back 3-4 years, what we've done is just a 5-6% Nifty for back-to-back 2 years. So there's no real bubble or euphoria really that there is. And I think that is a very good positive and a base. So when you talk about a sight, a clarity, when the clarity or breakouts happen from long basis of consolidations, that's when the momentum comes in. So I feel that the bull market in India is about to start. I think that the continuation of the move in capital goods, engineering, infra, I feel that India is going through a massive shift in the whole capex cycle. And these sectors, the good point is that, I like things which have not moved for decades. And when they see a revival, the upside is massive. The trends tend to be large. And these sectors and themes have not done much. They have just seen a little bit of a 6-month or a 1-year kind of run. I have a feeling that this is going to be the big theme which is going to dominate the markets for the next few years. The big thing I really want to talk about, Prashant, is the fact that most people think that small and mid caps are bubble, that there is euphoria, etc. Yes, valuations have got stretched somewhere, but I don't think that it's going to be across the board. I feel that there are some companies coming out with very good numbers. A lot of industries seeing a very good revival. The fact is that the 50% of the market, which is important and which is in everyone's portfolio by way of whatever funds they hold, has actually been very quiet. So the thing is that broadly the market is coming out of a nice sedate 2-year consolidative phase, and when breakouts happen after consolidation, I think there is a good amount of energy that goes in. And I think that there is going to be continuation. As I said, the whole capex cycle turning is going to be a far-reaching impact on a lot of stocks, especially in the mid and small cap.
Okay, interesting view coming in there. By the way, we have Manapuram Finance that has come out with its set of numbers. And by the face of it, in comparison to the poll that we had out, these numbers look good. So we have the net profit number that's much better. And the second number is the NI, that as well as 100 crores better. So these numbers look relatively better in comparison to what we are working with. Abhishek will be joining in a few minutes from now to fill us in with more details. But for the time being, let's get in Hemang's view. Hemang, we just got two numbers, the net profit as well as the NI number. But the big talking point has been that the banks have sensed an opportunity in this gold financing space. And they are making their moves, which in turn is limiting the growth of these gold financiers. How would you approach them, and if any view on Manapuram?
Nigel, if you see the Manapuram numbers, we are yet to get the fuller details, but Muthoot Finance, would be a right comparison to look at. So in case of Muthoot, there was surely a lower muted growth. And also for many of these NBFCs, the margins, the NIMs have been under pressure. So I think, it will be good to see what kind of, growth Manapuram is displaying and at what margins. Clearly, the market would focus upon the companies where see a little bit of surprise on the NIMs and a better outlook on the growth front. So only once we have those details, we'll be able to kind of form a view there.
Okay, that's a word on Manapuram. Well, with that, let's actually get you some more opinion on the market. Again, a market master we were in conversation with on Muhurat Trading Day. We caught up with Helios Capital's Samir Arora on the FII interest in India and his take on where the market is headed ahead of general elections, what the possibilities could be depending on that electoral outcome next year. Listen in to excerpts from that special conversation.
I don't agree with this conversation that, foreign investors are selling because they find opportunity because the interest rates are high. That is one small part. First of all, the equity guys don't immediately switch around their interest to debt, and they find within their basket, India versus China or India versus something else. So I think these are small things. Foreigners will come, and Indians have always been there in the last many years. Therefore, both the things will work together as long as the rest of the thing is doing well, which is the corporate sector and earnings. Therefore, overall, it is positive. If, let's say, it's like 2004, where there's a change of government altogether, I think you will lose like 2004, which means 20% down on day one, and then you recover it over next 12, 18 months. But the probability of that, I mean, I don't know how to calculate, but I would think it's no more than 5, 7, 10%. But if it happens, yeah, the market will fall. You can't immediately discount absolute surprises, and then people will have to adjust. But that is what happened in 2004 also. And then, life moves on. We have seen market move on with wars and elections is one thing. But initially, and for the 6 month, 3 month, 9 month, it will be a negative performance for sure.
Okay, well, that's Samir saying it as he sees it. Back to Hemang for some more thoughts. Hemang, as we're coming down to final thoughts on the session, give us an idea. I mean, anything from mid-caps, because that's where the excitement has been, mid-caps or small caps. Earnings season has also drawn to a close. So something that stood out as a, let's say, a pataka for you.
So I think, if I have to look at some of the interesting mid-cap ideas, I will look at some of the garment and textile exporters. So Gokaldas and Welspun India are the two names where, we think that in terms of growth, in terms of valuation, there is a lot of comfort. And there will be surely about 15-20% kind of an upside potential. And one more theme I would like to touch upon is the wealth theme, because the entire capital market ecosystem, exchanges, depository, brokerage firms, have seen a good amount of action, and wealth companies would also be a sub-segment of that. So I think, 361, which is ex-IIFL Wealth, Nuvama, which is a newly listed demerged arm of Edelweiss. I think these are the names that one should surely look at.
Okay, all right, Hemang, just hold on to that thought. By the way, pull up the intraday chart on Manapuram Finance. For whatever is out, whatever the details are out, and I think there are two key numbers in there, the intraday chart should tell you a picture. That stock has spiked up and spiked up in style. It's moved to the high point of the day as we speak. So, a little tricky because it's in the dying minutes that it's come out. But for the time being, at least, the street is buying that and hoping that the fine print as well will be equally good on that particular stock. Hemang, before we wrap up, tell us that, a couple of stocks with the markets or a sector which is looking overheated as of now, which you'll say, okay, the good news is in the price, let's step aside for the time being.
I think, Nigel, what we have seen is that in case of, let's say, cement, definitely the sector has run up quite a lot. And the mid-cap cement companies have seen a run up in anticipation of some M&A activity, whereas we haven't really seen anything major. Even some of the numbers that companies have reported have not been that great. So that is one particular space that one should avoid. And of course, the mid-cap infra companies, with all kind of order flows and, the story that people are narrating, I think the quality and corporate governance of some of the mid-cap infra companies has not been great. So that is one pocket that I would like to avoid at this point.
Okay, all right. Hemang, we'll leave it on that note then at this point in time. Thank you very much for being with us. Thanks to both Mitesh and Hemang for taking us through the market close. And we are getting a close which is actually fairly quiet, not much change on the large cap screen, at least the Nifty was largely down about 80-90 points right through the day. And that's how the day is closing up as well. 19,440. That's the level that we are clocking right now. The story is that there was some recovery in the financials in the banks, but not enough to change the picture on the Nifty too much. So if I talk about the downside, IT, banks, and some of the heavyweights like Reliance, that was the problem area for the market. So that translates into names like Infosys losing about 1%, ICICI Bank, TCS, HDFC Bank, RIL, of course. All of these stocks down between 0.5% to 1%. Not too much, but this was the kind of cut. SBI Life had a rough day. So did Bajaj Finance. Both of these stocks down between 1 to 2.5%. So some of the financials looking weak. On the upside, Coal India, what a star, of 5% solid rocking up move. After that came in Eicher Motors with a good performance for the second quarter. Hindalco also did pretty well, and M&M saw some buying. So two of today's stars, companies that Nigel tracks, and both of them hitting it out of the park today.
Well, that's right. Coal India has hit an 8-year high. Actually, that's what Hormuz tells me. So big move that we've seen out there. That stock does very, very well today. But from the broader markets, there was plenty of action in there. You had Everest Canto, the stock was up close to 14%. You had Vocart, that outperformed actually the farmer index. That was up more than 10% in trade today. Quick Healers up 9%. You had CAMS, so that one as well was up. BSC up close to around 9%. Big move out there. Zagil, we'll try to do a deeper analysis on that one. That stock as well is up close to around 9%. Motilal Oswal as well, 8%. So plenty of gainers actually Surabhi from the broader market. So the headline index goes on with a cut. A few of the names that Surabhi spoke about, well, they are part of the Nifty Financial Services Index. And that index was playing out expiry. So maybe expiry-related move out there. On the flip side, you had Igarashi Motors. The stock did take a knock. Glenmark Pharma take a bit of a knock in today's trading session. A couple of other notable stocks as well that did move down. HG Infra, that stock was down close to around 5%. But Surabhi, the good news is we're off tomorrow.
It couldn't have come at a better time. I think, a lot of hard work goes. Of course, the CNBC-TV18 team has been pulling it all together, bringing you vibrant and very informative, insightful programming all through Diwali. So, yes, I think I can say that for Nigel, me, and the entire team that puts these splendid shows together. It's a wrap on this one, closing bell, but do stay tuned because coming up after the break is our Diwali special edition of Market Cafe. In this one, I caught up with Neil Parekh, who's the MD and CEO of Parag Parekh Mutual Fund, as well as Nilesh Shah of Envision, and both of them are giving out some big picture ideas for the next Samvat. Hear this out, it'll be an interesting one right after the break.